So I just received a message from one of my students. He was asking me, Rohit, what is your view on this stock? Now I don't give advice, but I said that I am not buying this stock. I have rejected this stock, and I will discuss with you in this video why I am not going ahead with this stock, in spite of the fact that uh, this stock has got more positive factors than negative factors. So this is Netweb. Okay, this is how the chart looks like. Let me expand this. Okay, so this is how the base looks like. So it's already broken out on 2nd of September. It already broke out of that yellow line, which was the buy point, and it already created a rising window, which is a very good point. If you look at the weekly chart, the stock is setting up nicely. Before we look at the chart, we will go to MarketSmith to look at the factors uh, behind the stock, why it might be going up. Okay. So we will go to MarketSmith, just have a look at the moving averages here. So blue, green, red, the 50-day moving average is above the 150-day, and the 150-day is above the 200-day. That's fine. The stock is above the 50-day simple moving average. That is also fine. Moreover, there are 10 candles in this consolidation, multiple weeks of consolidation. That's a good point. And if I draw the base for you, so that's point 1, that's point 2, 3, 4, and 5. So I look for minimum 4 points in the base. This has got 5 points in the base. 4 points means 2 contractions or 2 corrections, which this stock has. So it's set up nicely on the right side, not a problem. The buy point, which is point number 3, is in the green zone. And as you can see, 2-3 candles have closed in the green zone, which is fantastic. So everything about the stock looks good. Even during the consolidation, most of the volume bars are below the blue line, which means uh, contraction in volume. Okay. Contraction in volume, contraction in price. That is exactly what we are looking for. So very, very positive. This stock looks extremely positive. One rule I have is whenever a stock opens above the yellow line, I will never buy the stock, because what happens is it opens above the yellow line and then it drops, triggers my order, I get the shares, and then my stop loss gets hit. So that is one reason, that is one negative. Apart from that, I only see positives in this. Let's go to MarketSmith. Let's have a look at this stock. So I'm giving you a holistic view of a particular stock. I'm not just looking at the chart. I'm looking at multiple other things. So I will click on daily. I will expand this. So when you go through this video, you will also learn what is my process of looking at a stock. Whenever I open a stock, what are the things that I'm looking for before I make my purchase? Okay, what are the things that give me the confidence to put 5% or 10% of my portfolio in a stock? So this is the daily time frame chart. I click on consolidated. Now, first thing I look for is, see, the earnings are increasing, triple digit earnings growth, triple digit sales growth, and that too it is increasing. This is fantastic. So if at all I have to buy this stock, this is going to be a positional trade. This is not going to be a swing trade. Positional means I will probably hold it for a long period of time if I buy the stock. Okay, that's number one. Number two, if I click in this base, see it says pattern, cup, and stage 3. Stage 3 means basically base 3. So which means the stock is in base number 3 in its stage 2 advance. Normally in a stage 2 advance, you have base 1, base 2, which is called as the early stage. Then you have base 3, which is the middle stage, and base 4 and above are all late stage. By the time a stock goes from base 1 and 2 to base 4 or 5, the stock is already up triple digit percentage. So at this, buying this stock at this point is like buying the stock in the middle stage. So from base 3 to base 5, that could be a triple digit return. From base 3 to base 4, after base 4 is out, that could be 40 to 50% return. So buying here does make sense. Okay. Now don't consider this as a recommendation. I'm just telling you the positive factors that I see here. See, this is a cup with handle. Okay, this is base number two. Base number one must be somewhere here. They have not marked it on the daily time frame. Maybe on the weekly we will get that. So base one, and this is, wait, base two should be somewhere here. We will see that clearly on the weekly chart. This is the daily. So number of funds that are holding on to the stock has doubled in the past 4 quarters. Fantastic. Management ownership is more than 50%. That is again fantastic. Debt to equity is only 10%, which means it's not over leveraged company. Okay. Price strength is 92, which is fabulous, which means the stock has outperformed 92% of all the stocks in the Indian stock market based on a 1 year performance basis. Institutional demand is A rated, which is fantastic. Very heavy institutional demand. Group rank is 26. I prefer this to be less than 20, but 26 is fine. EPS rating is 99. Fabulous EPS rating. Okay. The stock has done better than 99% of all the stocks in the Indian stock market in terms of earnings stability and consistency and growth. Master score should be more than 80. This year it is 85. So fabulous. As you can see here, the EPS has gone up like 10 times from 1.62 to 13.91, almost 10 times in how many years? 3 years. The EPS has gone up 10 times in 3 years. So if we look at this stock, let's say go to the weekly. So we are in September 2024. So if we go back to September 2021, the stock was not traded. So the stock is a recent stock, is just IPO'd recently. Recently means not too far back. I think it has completed just 1 year after the IPO. So it's very early. Even during that period, the stock has tripled. It has gone from 800 to 2600. So everything is great about the stock. The return on equity or minimum criteria is 17%. Here it shows 8%, which is fantastic. Cash flow is positive. EPS growth rate and earning stability, maybe the data is not there because the stock doesn't have a lot of history. P ratio is 178, which is towards the higher end of the range, which is exactly what we want to see in a growth stock. So see, I don't see any negative factor here, okay, in this stock. I did not find a single negative factor aside from the fact that the stock has already broken out and then reversed back. Okay. Another thing is it's a third stage. It's a third base. I would prefer stocks at base one and base two, but this is third one. Still okay. It's in the middle stage. Now, the only reason why I rejected the stock is because it never showed up in my radar. And the reason why it did not show up in my radar is because of this. You see the average volume of the stock is 166. If you check here, 166.334K. Okay. My minimum criteria is 200,000 shares traded per day. Okay. And by the way, this is today's candle. The market is live right now. This is today's candle. The stock has broken out. Looks like the rising window will hold. Okay. So even if I buy here, that would not be a bad decision. However, my minimum average daily volume criteria is I want the stock to trade at least 200,000 shares per day on an average. Average means 50-day simple moving average of volume. That is my minimum basic criteria. Now, the reason why I have this criteria is if you look at this stock, this has all the factors in its favor. If I say there is one negative factor, for every one negative factor, there are 5 or more positive factors. So this is extremely good. On the weekly chart, it looks good. Even Market Smith is approving that it's forming the third base. On the weekly, it looks fantastic. On the daily, it looks fantastic. The parameters, the technicals, the fundamentals, everything looks okay. Okay. So my question is, if everything is fine, then why is it that the stock is not trading millions of shares? Why is it that the stock has not come in the radar of institutions? Why are the big guys not buying the stock? 166,000 is not great volume. Now, the stock is priced higher. That could be another reason why there is no volume. But irrespective of whatever is the price, at least the volume should be a couple of 100,000 shares average daily volume per day, because on bigger stocks we see millions of shares traded every single day. I mean, 10 million, 20 million, 30 million, 50 million, that's normal. Okay, so why is it that this stock is not even trading quarter of a million shares on an average? So I would like to see more volume coming to the stock. I would like to wait till the stock reaches a level where it starts trading with heavy volume. Maybe by that time, after 3 or 4 quarters, the stock will reset, the base resetting will happen, and I will get an opportunity to enter at the first base. A first base could appear at the top if the base resetting happens. Okay. If you want to learn how base resetting happens, then you can check my base counting video, which you'll find somewhere on my YouTube channel. Okay. But I hope you understand my argument here for not putting my money in the stock. I would prefer to buy stocks with a minimum average daily volume of 200,000 shares per day, because if I buy this stock and if this stock ends up giving me a very good return, then it will create a belief inside me that every stock which has got a volume of less than 200,000 shares per day might give me a similar return. That will create, and that's a dangerous belief to have. Okay. I want a minimum threshold level of average daily volume. Now, imagine this. Imagine that you are a fund manager and you have $10 billion under management. So the size of your fund is $10 billion. Now you look at this stock. Okay, will you put 10% of your portfolio into this stock? So 10% of $10 billion is $1 billion. Will you put $1 billion in a stock which is trading less than quarter of a million shares per day, or let's say 5%? Okay, will you put like $500 million in a stock which doesn't show volume? Okay, what if you buy and suddenly there is selling coming in the market? What will you do? What if the stock becomes volatile? What will you do? Okay, so if you think from a perspective of a fund manager, you may not have $1 billion, but nothing stops you from perceiving yourself as $1 billion fund manager. If I had $1 billion or $10 billion under management, would I put my money in this stock? The answer is no, because I want certain threshold level of volume. This might seem a very small reason to reject the stock, but the habit that you build, okay, with a small portfolio, the same habit is going to repeat when you have a multi-million dollar portfolio. Maybe you become a fund manager in the future, or maybe you have millions under management. Whatever it be the case, it doesn't matter whether you have a big portfolio or a small portfolio. Your behavior should be the same. Okay, you should perceive a stock and profile it properly. This is a low volume stock. There are thousands of stocks available out there where millions of shares are traded every single day. So I don't like the volatility in the low volume stock. The stock could collapse 10% in a single day and then shoot up 10% again the next day. Okay, I don't want that to happen. So in spite of all this earnings growth, the fantastic ratings, the fantastic group ranking, good management ownership, lot of funds owning the stock, in spite of the middle stage base, in spite of the stock being a new issue in the market, new IPO, but I am not interested. I will give it some more time. Let it consolidate for 4 more quarters. Let 1 year go away. Okay, after 1 year, I will get an opportunity to enter into the stock if the stock proves itself. Okay, there is no need for me to get into the stock. There are other stocks available out there where I can deploy a large. But you think about it, you just need 10 good stocks in your portfolio. Let 10% per stock. That's not putting too much money into the stock. Even if your position size is 5%, you just need 20 stocks out of 5,000. Okay, so if you just need 20 stocks out of 5,000, that's less than 1%. That's less than 0.5% of the total number of stocks available in the stock market. So why do you need to compromise your standards and get into something okay, which is not showing volume. Now imagine if this stock had showed good volume and one of these parameters was off, then probably I would have invested in the stock, because one of the parameters here, that's okay, no problem. But if the volume is coming, the base is forming, I wouldn't be, if let's say this was 91 instead of 99, or if this was 89 instead of 99, I would be fine if the volume would be great, right? So I'm looking for those kind of stocks where, not just this should be in my favor, this should also be in my favor. So I hope you understand my argument here. I am not putting my money. Okay. One other thing I want you to notice is the number of shares outstanding is 6 crore, but the number of shares available for trading is very small. It's like less than one third of shares are available for trading. Probably that could be another reason why the stock might be going up, because there is limited supply of shares available in the market to trade. The management is owning 75% of the stock, which means only remaining 25% is out there for trading, out of which 14% are owned by funds. So 90% of the stocks, assuming these funds are holding the stock for a long period of, want to own the stock for a long period of time, 90% of the shares are gone. So there are only 10% of the shares remaining, which means 0.6 crore. 0.6 crore is like 60 lakh shares. Okay, like 6 million shares available for trading. That's not much. Okay, so it's a not many shares are available for trading. Okay, that is also, in a way, that is good that not many shares are available, so there will always be demand for that small shares. But even those small number of shares, there should be trading happening, there should be good volume coming into this, the stock, as the price is moving up. That would give me more confidence. So from my side, it's a no. If you want to put your money in the stock, no problem, but this is not a recommendation. Okay, you have to understand what risk there is in the stock. Thank you so much.